All right, so today you're welcome. You're welcome to another session of learning where you learn all the intricacies, all the details of trading, and as you work towards becoming a proficient and professional trader. So today I'm going to be showing you something very amazing. Now, many of us know that we can take some trades sometimes, and the trades goes against us. Even though at the end of the day the trade starts going in our favor, but we get stopped out before the trades actually move in our favor. And sometimes we might begin to wonder, what exactly is the problem? What am I doing wrong? I take a trade and it stops me out in a loss and starts moving in my favor. Is it that some people are actually watching what I do to make sure they take out my stop loss and start moving in my favor? Now, I'm going to be explaining why that happens. And this is usually peculiar to many traders who are new to the trading system. All right, so let me explain something here. Now, when you go online, you are actually going to be fed with quite a number of generic information. Now, when I talk about generic information, I'm talking about information that is available to everybody. Now, once you go online, you are able to see certain kinds of information that everyone else sees. And these kinds of information, even though they are actually good, they can be a little bit destructive in themselves. Now, I will explain what I mean by that. All right. But before then, let's take a look at something. All right. Let's take a look at something. Now, if you go online, you're most likely going to see support and resistance zones, descriptions of when to take a trade, how to get out of a trade. You are most likely going to see support and resistance zones. Okay, they'll tell you to buy at support and then sell at resistance. Okay, so this is just the normal thing to do: sell at support and sell at resistance. Rather, resistance is above, and then you want to buy at support. So you want to buy at areas below, you want to sell at areas above. Now, this is a very wonderful information, I don't deny the fact. But the thing is this: if you only trade based on support and resistance, you are most likely going to be stopped out, because the essence of trading is to look at what the majority of people are doing and see how to get into the line of the trend, rather getting into the trend without leaving loopholes to be stopped out of that trade. All right, so let me explain something to you here. So we look at this here. If you open up a chart, this is the USD CHF chart. If you open up this chart right now, you're most likely going to see this. All right, so this is me marking out my support and marking out my resistance zone. You're likely going to see this. Now, you could actually define this area as a support. So we see that that area was a support because we had multiple bounces right there, and we broke out from that point. We tested that point right there. The support turned into resistance at that point. So when it got back into that space, we most likely will be looking forward for sales. We want to take a sell position at that point. Now, here is what people would do. Because of the information that is widespread, most traders will look forward to selling at this point. All right. So once they see a candle that shows bearish structure, bearish candle rather, they want to take a sell. And because they want to minimize their losses, and have a high target. So you can see people say, I have a risk reward ratio of 1 to 7. I have a risk reward ratio of 1 to 10. I have a risk reward ratio of 1 to 20. Now, those are beautiful in numbers. They are beautiful on paper. But when it has to do with trading the live market, the possibility of you making that much reward for the little risk that you take is quite low. All right. So we see they put a stop loss right here, and then they are targeting probably the low. Now look at this. You see how they got stopped out on this? They got stopped out on this, and the market started moving towards the downside. Now let me show you how you can avoid this completely. Take a look at this. Let me try to explain how you can avoid this. But before then, let me give you an idea as to what is happening within that space. So you see that the market, the price, pushed higher and then came down to this point. Now, the moment it came down to this point, most people are looking forward to sell again, even though they were stopped out. Now, this being stopped out and wanting to take another trade almost immediately is something that can destroy your trading account, because there's a lot of manipulation that goes into the market. So you see this candle right here, Let me zoom in so you see this candle right here would look like a will I call it a hammer? Yes, will look like a hammer, and then you want to take a sell right there. Once you take a sell at this point, you begin to see another bullish structure appearing. And what happens after you see this? You begin to fidget again. Even though you got stopped out, you took a sell right there, and now you are seeing bullish candles again. You are now doubting the second trade that you have taken. Even though the first one ended in a loss and you did not follow your trading plan, you took a second trade. Now you are seeing the trade actually going to your stop loss. Now, let's say you take a trade at this point. You take the second trade right there, and then you decided to put your stop loss above right there. Okay, now you see that the trade, immediately you took that trade, it started pushing towards your stop loss. Now, the normal thing for you to do at this point, because you have lost the first trade, you are scared of losing the second trade. Once you see this first candle, once you see the second candle, you see this third candle in green, all that will come to your mind is, I'd rather close this trade than to lose another trade. And the moment you close that trade, you see how well it began to move. So this is the reason why you don't want to be emotionally attached to your trade. Trading with emotions is one of the worst things that you can do as a trader. It is frustrating, it is psychologically draining, it is mentally draining. All right, so let's get back to business. So, how would I set my stop loss instead? Now I've told you, I've showed you some of the psychological things that actually go into your mind when you're actually taking trades. So, if I were to be the one, there are many other things I would consider. Now, here's one of the things I would consider when putting my stop loss. All right, I'll look forward to any support zone that is also above my stop loss or close to my stop loss, where the market could likely be headed for. Now, this is another support zone. Now, even though this place was a support zone, turned into resistance, now this is another resistance zone. So I want to make sure that my um, stop loss is a good distance away from any support zone that is close to that area. So my stop loss, all right. Okay, so my stop loss would be above that area, above. All right, I try as much as possible to hold my stop loss above the last high in any support zone that is close to my entry area. So this here was the last line, the last high. Yes. So I want to put my stop loss exactly above that zone, and then I want to target the last low below right there. Okay, so whatever takes place within this trade, within this area, I'm convinced that, okay, if the trade stops me out at that point, I don't have anything to be afraid of, because I took the trade based on my trading plan, based on my trading strategy. And if for any reason the trade does not go in my favor, I don't beat myself up or try to enter the trade again, knowing that I took a trade and it got invalidated. And then I can go to look for other opportunities, or I take a break from trading for that day and look for other opportunities the coming day. So here's a takeaway. When you want to take a trade, make sure that your stop loss is far away any close resistance or any close area of interest. All right. So people who actually trade order blocks, they would be looking forward to taking a trade probably at that point. All right. They will be looking forward to taking a trade probably at that area. So if you put your stop loss at that point, you are sure to be taken out, because most people are looking forward to taking a trade exactly at the point where you are putting your stop loss. So imagine um, putting your stop loss right there, which was exactly where we put our first stop loss. So imagine putting your stop loss there. People are interested in actually taking that trade at that point, and that is where you put your stop loss. Be sure that you'll be taken out of that trade. So the next time you are about to put your stop loss, consider all of these things. Don't be so consumed, about how much you are willing to make. Be more concerned about how much risk you are putting on the table, and that also includes how well you are setting your stop loss. Some people are very good when it has to do with analyzing the trades, but they have a problem with greed. You see, making use of very tight stop losses in many cases is a result of the unwillingness to let go of greed. I'm not saying that this is so for everybody, but for majority of people, they are so overwhelmed by their greed that they can't even see what is true. You are putting your stop loss so close to the support area, hoping that the trade will go well. And sometimes it might actually go well, but for how long or how many times will that happen? So you have to make sure that you are preserving your mental capital, your psychology as much as possible, because that is very important and very critical to your trading success. All right, so I'll call this a day. And once again, if you have not subscribed to my YouTube channel, do well to do so, as I'm going to be sharing with you some of the most amazing tips and details of the trading industry, and also how you can make most of every trading setup that you find. Do have a wonderful day, and take care of yourself. I'll see you tomorrow.